Learn anything new here? We've just got a few examples to practice what we've covered in the last few sessions. So here are a few questions to practice the basics. Example 5, VAT records. For how many years should VAT records be kept by a business? Now I'm guessing you can probably remember the answer to that one because you may have just watched the lectures where we discussed that, and the answer of course would be 6 years. The good news is, if you didn't remember the answer to that, you could consult the reference material. So let's go there now. Section 5 of the reference material is called Keeping Business and VAT Records. It will be available through a pop-up window, and there it tells us the books must be kept for 6 years, and also mentions a bit of extra information. The penalty for not doing so would be £500. So worth noting that too. So that's example number 5. Example 6. A VAT registered business issues a sales invoice to one of its customers for £300 exclusive of VAT. Remember that word exclusive means £300 does not have the VAT added on yet. Which of the following shows the effect of the transaction in terms of the VAT position of the business? Well, first thing I might do is calculate how much the VAT would be then. £300 multiplied by 20%, and that's worth noting. I would always assume that VAT is at the standard rate unless told otherwise. So £300 multiplied by 20% gives me £60 of VAT. So I now know that the business would charge £60 of VAT to the customer. The customer would have to pay £360 in total to get the items. So does that £60 of VAT, which incidentally is the output VAT, because it's the VAT on sales going out of the company, does that reduce the amount that is owed to Revenue and Customs? Does it increase the amount that is owed to Revenue and Customs? So they're actually opposites of each other. The VAT owed to Revenue and Customs will reduce by 60. The VAT owed to Revenue and Customs will increase by 60. This one, sneaky one in the middle, says the VAT owed from Revenue and Customs will increase by 60. Or there will be no change in the VAT position. So I think I can rule out the fact that there will be no change in the VAT position. £60 has to be accounted for somewhere. And what I might choose to do with this sort of question is work out what I think the answer is and then see how that fits with these options. So I think I've got an extra £60 of output VAT. I think that the business needs to pay an extra £60 to Revenue and Customs. It's collected the money from the customer, it now has to be paid to Revenue and Customs. So the VAT owed to Revenue and Customs will increase by 60. I'm going to go with that one. The first one is suggesting the VAT owed will reduce. That's not true. The second one is suggesting that the VAT owed from Revenue and Customs will increase, which would mean Revenue and Customs are giving us money. Again, not true. So I'm going to stick with my answer there, the third one. Rates of VAT. Remember, I did say in terms of rates of VAT, the reference material does tell us what those rates are. Could perhaps go back there again. There they are. But it doesn't give us examples. So I suggested when we looked at this in the session where we covered this, you don't need to know everything. We don't need to know every single item, but just learning the ones that are printed in our course materials would be useful. So at what rate of VAT will this domestic fuel be included on the invoice? Hopefully you can remember that one. We talked about your home gas and electricity invoices being at 5%. 0% is a rate. 0% is charged on like essential food items. 20% is the standard rate for TVs, electronics, luxury items. 17.5% is an old standard rate. We haven't had that rate for a while. So the answer there would be 5. And then true or false. Are the following statements true or false? Let's take them one by one. VAT is a direct tax. A direct tax would mean the person responsible for paying the tax pays it directly. So like a company has a tax bill, corporation tax due on its profits, it pays that to Revenue and Customs. That's a direct tax. VAT is an indirect tax because it's actually paid by intermediary companies along the way. So when I buy my TV, although I suffer the cost of the VAT, I'm not paying it directly to Revenue and Customs. So I'm going to say false for that one. A business will suffer the full cost of the VAT. Well, as I just described, also false, because it is the end consumer who will suffer the full cost of the VAT. So I'm going to say false to that one. The business may pay the VAT as it goes along, but it's the end consumer who bears the cost. So we've now got some of the opposites here. VAT is an indirect tax. So that links with that one. It can't be both, can it? And I've decided it is an indirect tax. The business will suffer the cost of the VAT. We said no, it won't. That is because the consumer will suffer the full cost of the VAT. So there's the opposite there. And then VAT records must be retained for 5 years. Also false, because the answer to that is 6, and you can look it up in the reference material if you need to. So some really useful little examples there just to practice what we have discussed so far. I hope you'll join me for the next lecture where we'll move on to some new topics. You will probably have come across invoices and the preparation of invoices in your previous accounting studies, but what we're going to look at here is specifically VAT invoices, or what sometimes get called tax invoices. And these invoices are very important because these form the backup of the figures in our VAT return, and these are the documents that Revenue and Customs are potentially going to ask to look at as part of a control visit. So what are we talking about then? We're talking about the invoices that are issued by a VAT registered company. Let's say they sell some goods or provide some services. They are required by Revenue and Customs to give the buyer, so their customer, an invoice, and that invoice has to be given within 30 days of the supply of the goods or services. And just to make things really clear, Revenue and Customs quite usefully then give us some guidance about what needs to be included on that VAT invoice. So there's certain things that must be included, and we're going to look at that list in just a moment. Now there's no requirement to keep the invoice on as a paper document, as a hard copy. It can be kept electronically, but it must be kept somewhere, either as a hard or a soft copy. And of course the output tax figures, the VAT on the sale, are the figures that are going to correspond with this particular invoice. So it's important that we keep the invoice as supporting evidence of the figures in our output tax figure on our VAT return. Now when a business makes a sale, that sale is probably preceded by a number of other documents. So the requirements of Revenue and Customs are, when we're dealing with output VAT and we're dealing with sales, as well as keeping a copy of the sales invoice, we need to keep copies of other associated documents as well, such as the order. So we don't just want to prove that we sent an invoice, we want to track that back to the order, where the customer says, please can I order A, B, C and D? And then the supplier says, yes, no problem, we'll send it out in the next day or two. So the order would be an important document to be able to backtrack to see that this sales invoice is genuine. Also the delivery note. So the customer places the order, the goods are then dispatched, they're signed at the other end by the customer to say, yes, I received them. Revenue and Customs might want to have a look at that delivery note to prove that the goods actually were delivered to the customer. So the customer orders them, they get delivered, an invoice is raised. So they're documents that might back up and support our sales invoice. Now it's possible that having placed the order, having had the goods delivered, and then having the invoice sent out, the customer says, actually these are not the standard that I wanted, they're defective, they're not very good, I want to return them please and get a credit. So then we'd be looking also at copies of credit notes. They also have to be kept so they can be matched to the invoice that they originally related to. And you will know from your financial accounting studies that when we make sales on credit, that we will keep records of those in our books of prime entry, which will include the sales day book and the sales returns day book. So we need to have copies of those available as well as part of our books of prime entry. We need records of what's been happening through our bank account. So that could be copies of our cash book, but also copies of our bank statements. And in addition to that, any other evidence of sales. It may be that we're not selling things on credit, we are just selling cash sales through a till, in which case there should be some sort of till roll or computerized record of sales that the till has recorded for us. So all of that evidence needs to be kept in relation to sales invoices to support our output tax figures. Important note to note here, we did mention it before, but it's in our Assess Smart box, that when a VAT invoice is raised, the business has to make sure that it is sent to the customer within 30 days of the supply taking place. So what date did you supply the goods? What date did you supply the services? You have 30 days from then to make sure that the invoice reaches your customer. Now, what about the information that needs to actually be included on our sales invoice then? What do we need to actually print on the face of the invoice itself? And the answer to that question is it depends. There are 3 different types of invoices that we need to be aware of for this assessment: a full invoice, a simplified invoice, and a modified invoice. We then have a list of what needs to be included on each. And we start here with the full invoice. And you might already look at this and think, my goodness, that's just one invoice. I've still got to talk about simplified and modified. How am I going to learn all this? Well, there's some good news for you. Let's just flick to our reference material. Section number 6, contents of a VAT invoice. The required content depends on whether your invoice is full, simplified or modified. We then have columns setting out each of those 3. So we're here at the moment looking at the full invoice. And as you can imagine, the full invoice requires far more information than the others. It's full. It's going to be the one that asks for the most information. So there's a list of things that we would expect to be included. And as you can see, it's yes, 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 yes. All of these need to be included on there all the way down until the last amount there, which I will mention specifically within the chapter. So the last row is a no, everything else is a yes. So that's all in the reference material, so this doesn't have to be learnt, you just need to know where to look it up. Let's run through these items then. First thing, a unique sequential invoice number. So our invoices are perhaps numbered, say we're on number 1234, the next one must be 1235. We can't just skip about. Maybe our invoice numbers start with the letter S. We have S 1035, S 1036. They've got to be unique, they've got to be sequential. We've also got to have the name, address and VAT number of our own company. As the person making the supply, the supplier, we need to include the details of our own company, including our VAT number. The invoice date, and then the tax point date. Now they may be different things, but we will deal with that more fully in chapter 5. But we want the date of the invoice, and then we want the date at which the VAT is added. We call that the tax point. We then need the customer's name and address. I mean, that's going to be handy anyway, particularly if we're posting this invoice to them. But the customer's name and address should be included, and a description of the goods or the services. Now, when we say a description of the goods or services, what do we mean by that? Do we just say we sold some woolly hats? Is that okay? Probably not. We need to be a bit more descriptive. So we would give the price per item. So assuming that our invoice had more than one type of item on it, the price per item excluding VAT, the quantity of each item, the rate of VAT that applies to each item. So we're already building up a picture of what our invoice might look like. So for each individual item, let's say we sell dog food, So it could be 2 bags of my dog has to eat low-fat food because she's a little bit obese. So she's on a bit of a diet. So we have, let's say, 2 bags of low-fat dog food, excluding VAT. The quantity there was 2. The rate of VAT that applies to each item. So is that a standard rated item, for example? The rate of any discount, if I get one. The total amount without the VAT, and then the total VAT that's being charged. Now that all will make a little bit more sense, I think, if we actually see it in context. So let's just have a look at an example of an invoice. So things that we've already discussed need to be on there. We said they had to be a unique and sequential invoice number. We've got that there. We said there had to be a couple of dates, the invoice date and the tax point date. They happen to be the same in this example. That's fine, they won't always be, but they could be. It's not a requirement to include the due date, but it makes sense to include it so that your customer knows exactly when they're supposed to pay you. So it's not required, although it's often done. Of course, your own name and address and VAT number, as well as the customer's information that we've talked about. But this is where we were when I was talking about the dog food. So we've got the description of the item. So I had low-fat dog food. We'll call it product A. I had 2 units of that. Price. This particular item is £100 for each item. It's the unit price. So it costs £100 for one. I'm buying 2 of them. So multiply those together. I'm paying £200 in total for product A. And product A needs VAT adding at 20%. So let's get that added on. That's an extra £40. Product B, 4 units of that are included, £25 each. So that's £100 in total. That one is a reduced rate VAT item. That's another £5. And then a service. 3 hours of service, £75 for each one. £225 there, and this particular service is 0 rated, so no VAT is added. So this invoice has been created like this on purpose to show you that one invoice might include both standard, reduced and 0 rated VAT, and that's fine as long as we clearly show the VAT that is going to be applied to each line. So that's all required. We then need the total excluding VAT. So we would literally subtotal this little lot. We need the total amount of the VAT. So subtotal that little lot. And then, this is the really interesting part, there's actually no requirement to include the invoice total. Your invoice could just stop there, show the net figure, show the VAT, and not show the total to pay. However, most businesses will show the total amount that needs to be paid, because not doing that, I'm sure, would cause confusion with customers and they might not get the full amount owing. So it's very practical, it's very sensible to include the gross figure, even though it is not actually required by the legislation. So when we look back at our reference material, the last thing that we said, interesting, that we'd come back to, the total amount including the VAT is not required on a full invoice, even though we do include the total excluding the VAT as well as the VAT itself. So we can work it out. It's not required to be included, but I'm quite sure the majority of the time it actually is. We've then included the payment terms. That's really useful so the customer knows how to pay us. So we're telling them how many days credit they get and how to pay us with our account number and sort code and things there. Okay, so not required, but of course useful. How else is the customer going to know how to pay you? Other things to note then. I think we'll perhaps mention some of this. So there are other items which can be included. For example, no requirement to include the total amount. We've just spoken about that, but most businesses would for clarity. So do make a mental note of that. That is likely to be something that the examiner might choose to test. And here, if an invoice is issued by a VAT registered business for either a 0 rated or an exempt supply, the invoice must say so. So in the same way that the invoice has to detail the taxable supplies, standard, reduced, 0, it would also need to detail if an item was exempt. There'd be another line item, and under VAT rate we wouldn't write 0%, we would write exempt. Somewhere on the invoice it would have to clearly show that this item is exempt rather than a taxable supply. Each of these, just as a bit of revision, are taxable supplies. So very important to be clear about that distinction. So make sure you are clear on the detail that needs to be included within an invoice. The reference material is really helpful in that respect, and I would definitely suggest that you use it. You can join me in a moment or two, come back, and we will have a look at simplified invoices. So now we've seen the information required for a full invoice, let's have a look at a simplified invoice. And as its name suggests, a simplified invoice is going to be simpler, and it's going to require slightly less information to be included than a full invoice would. So when can a simplified invoice be used? And the answer to that is if the cost of the goods or services that are being supplied are costing less than £250, including VAT. So we're looking at a gross invoice total of less than 250, and if that's the case, then we can use this less detailed or simplified invoice. And this makes sense, doesn't it? I mean, if we think about the full invoice that we just considered, and then we think, well, if I pop out to Tesco in my lunch hour and I get maybe some sort of sandwich and a drink, then I'm not going to be getting a full-on invoice with all that information that we've just talked about. I'm going to get some sort of till receipt, which might fall into the category of a simplified invoice. The value is less than £250. The detail included on there can be less. Now, some information is of course still included. We can't just include nothing. And the reference material is very helpful in this respect. And we can see that a simplified invoice is useful where the supplies are less than £250, so that's good to know that they tell us that. Then we've got a whole column of details of what the simplified invoice must include and what is not actually needed. So you can refer to that if you get questions on invoice content in the assessment. But let's just run through what is still required. The invoice still needs a unique invoice number. We still need to know where the items were purchased from, so we need the supplier's name, address and VAT number. That's still really important, as is the tax point date. We'll talk about tax points in chapter 5. A description of the goods or services that were supplied and the rate of VAT for each one. So similar to our full invoice in that respect, where if the supply is items that have different VAT rates, we need to specify the VAT rate for each line item. Now this is an interesting part for me because our full invoice didn't need to show the total including VAT, and yet the simplified invoice does need to show the total including VAT. But the difference is the simplified invoice doesn't need to show the individual items. It just needs to show the totals. So it needs to show the total of each item, but it doesn't need to show the net and the VAT separately. If items are charged at different rates of VAT, then we need to show the VAT rate of each one and the gross amount. So that perhaps becomes a little bit clearer when we see it in invoice form here. So note that there are no customer details included on the simplified invoice. I gave the example of going into Tesco perhaps to buy some lunch. When I come out with my invoice or my till receipt, it doesn't have my customer details on there. It just has the details of who I bought from, so Tesco, where's their address, what's their VAT number, invoice number, date, and so on. And then it tells me I bought one sandwich, maybe that was standard rated, how much did that cost? I bought one drink, what was the VAT rate on that? And so on. So it will show me item by item the VAT rate on that particular item and then the total. Nowhere does it need to show the net amount and the VAT amount separately. It's simplified so it can include totals only, as long as it still shows the VAT rate for each line item. It then does need to show this, which crucially our full invoice doesn't. It needs to show the total including VAT. So that's my simplified invoice. A modified invoice is actually very, very similar to the full invoice. The modified invoice is used for retail supplies. So I'm buying from a retailer rather than a wholesaler. And the retail supplies that total over £250. So if I'm shopping for some furniture from Marks and Spencer's or Next or whoever it might be, and the total of my furniture comes to £250 or over £250, my invoice must then show the same information as a full VAT invoice does, but it must also include the total including the VAT. So when I look at my modified invoiced column and compare it with the full invoice, pretty much everything is the same. So yes and yes, yes and yes. So all the way down, it's absolutely identical, all the way down till I get to the very last item, where on the full invoice I don't need to show the total including VAT, but on the modified invoice I do. So again, refer to the reference material if this comes up in the assessment. Electronic invoices. We have the option of these sometimes, don't we now, in shops when we get to the till. The cashier may say, can I email you a copy of the invoice rather than printing it out? It's part of our effort to save paper perhaps. So electronic invoices can be given instead of paper invoices if the customer is happy. If the customer wants a paper invoice, then they have to be given one. And if the invoice is issued electronically rather than a paper version, it must still include all of the same information that the paper invoice would. So I can't neglect or omit any information. I'm just choosing to send that paper invoice in a different format, that's all. Now if the invoices are sent in batches, so let's say I'm sending 100 invoices to my one customer, maybe I don't want to print their name and address on every single one, so then I could say, well actually I'm sending a batch, so this is the common data, this is your name and address. As the supplier, this is my name and address and my VAT number. So this information applies to all the invoices that follow. So we can include that in one sort of file at the up front rather than putting it on every individual invoice. So it tells me here an example would be the customer name and address on the batch header and then in an abridged version on each invoice. So in order to be eligible to supply electronic invoices, the business has to be able to prove that it can transmit them in a secure format, such as a PDF, and it also has to be able to ensure the authenticity of the invoice information. Pro forma invoices. What are these? Pro forma invoices are crucially not VAT invoices. They cannot be used to reclaim VAT. VAT invoices are still needed. But a pro forma invoice is often used if the supplier wants some sort of payment up front. So if I order something and the supplier says, no problem, we can get that organised for you, but we'll need a 50% deposit. I say, no problem, send me an invoice, I'll pay it. So pro forma invoices are used where the supplier needs an upfront deposit before they will dispatch the goods. And when this pro forma invoice is issued by the supplier, it must clearly say, this is not a VAT invoice. Once the goods have actually been issued, so I pay my deposit 50%, the goods are then issued. At that point, the supplier will send me an invoice. So I still need to receive a proper VAT invoice once the goods have been dispatched. This is going to be needed for me as the customer to reclaim the input VAT, and it will become the supporting invoice for the output VAT that the supplier will account for in their records. Remember that these tax invoices have to be sent within 30 days of the goods being dispatched, or in this case, if we're looking at potentially a payment in advance, if the goods are accepted, the invoice has to be sent within 30 days of the receipt of the payment. So under what circumstances can we avoid needing a VAT invoice at all? Well, the first one would be is if we have a VAT registered business, they are not required to issue a VAT invoice to non-registered businesses or to members of the public. So if I'm shopping in my local corner shop and I'm buying, let's say, a newspaper and a packet of crisps, they're probably going to give me some sort of little till slip that doesn't really fit the criteria of a VAT invoice, and that's okay. But if they are selling me taxable items, and as the customer I request a VAT invoice, they have to supply one. So they don't have to give one in the ordinary course of their business because they're selling to people that probably don't even want them. Some shops now will say, do you want the invoice? Or they might, as a matter of course, not give you an invoice unless you specifically ask for it. So I'm thinking of corner shops specifically here. But if I ask for a VAT invoice, they have to give me one, but they otherwise don't issue them as standard. If that item that I'm receiving is a free sample or a gift, because I'm not paying for it, there's no VAT included, so a VAT invoice is not needed in that scenario. Or if the purchaser is on a self-billing system. A self-billing system is where the customer will prepare the invoice themselves. So the customer will make the invoice and say, this is what I've bought from you, here's the invoice for it, and here's my payment. So in order for a self-billing system to work, both the customer and the supplier must agree to this, and they have to meet certain criteria which are outside the scope of your syllabus, but the crux of it is that the customer says, these are the items that I've bought from you, and here is my invoice, and here is the remittance. So the customer does everything. You imagine that that might work, let's say, perhaps with a supermarket where Tesco buys from some local farmer. So they say, these are the items that we bought from you, we've generated the invoice, so we're giving you the invoice and we're paying you. Here we go. So that's what a self-billing system is. And that brings us to the end of this little session. So if you join me for the next one, we're going to have a look at domestic reverse charge. So I look forward to seeing you then. In this session, we're going to look at a very specific area of VAT called the domestic reverse charge. This comes into effect from the 1st of March 2021, and it does only really affect a portion of taxpayers because it relates only to the construction industry. Now, the way that the construction industry works is that often there would be a main contractor. So let's imagine that I want to have a hotel built. I find a builder and the builder says, no problem, we can organise that for you. So they become known as the main contractor. They're a construction firm. Now, as the main contractor, that doesn't mean that everything in terms of building my hotel is going to be done by people on their payroll. It might be very expensive for them to employ lots of staff, never quite knowing when they're going to get enough work for them. So what they tend to do is employ subcontractors. So they'll say, no problem, we've got this hotel now that needs to be built, we need somebody to come in and do some of the building work for us. So they get a self-employed builder to come help. Then they need a bit of carpentry work done, there's some woodwork, so they get a subcontractor to come in who's skilled in carpentry. Then they get a subcontract plumber. And each of these subcontractors will send an invoice to the main contractor for the work that they've done. And this domestic reverse charge changes the way that the VAT is dealt with in this sort of situation. It changes the way that VAT is invoiced between these VAT registered subcontractors and the main contractors. So we are just talking about our subcontractors here that are registered for VAT. So how does it work? Well, the subcontractors, or suppliers we might call them, because they are supplying their services to the main contractor, will send the main contractor invoices. So the plumber will say, I've just finished the plumbing for the hotel, here's my invoice, this is what you need to pay me. So they will send an invoice for their plumbing services to the main contractor who is their customer, and it will detail the work that they've done. Now, under normal VAT rules, you would be right in thinking that our subcontractor would send their invoice, and that invoice would add standard rated VAT at 20%. That would be the normal way to do things. However, under these new rules, we do things slightly different. The main contractor, assuming they are registered with the Construction Industry Scheme, or CIS, instead of the subcontractor accounting for the VAT is going to be dealt with something called a reverse charge procedure. So the subcontractor won't charge any VAT on their invoice. So their invoice will, let's say £100,000, VAT will be nothing, the invoice will be £100,000, and that's what they will be paid by the main contractor. But as far as Revenue and Customs is concerned, the VAT still has to be accounted for somewhere, but all this new legislation does is take the onus off the subcontractor for accounting for the VAT, and it puts the responsibility of accounting for VAT with the main contractor. So instead of the subcontractor dealing with VAT on their invoice, the main contractor will account for both input and output VAT. Which is a little bit of a strange way of doing things, but it's simply moving the administration of the VAT from the subcontractors. So when the subcontractor, let's say our plumber, sends an invoice to their main contractor who is building my hotel, their invoice may look like this. So it comes from Mr. Plumber, it goes to BT Balfour, and there were 30 hours of work on the plumbing. This one was working on a house build. So the amount was going to be £50 for 1 hour, 30 hours have been worked, total amount invoiced is £1,500, and instead of adding VAT at 20%, we say the VAT is being dealt with by the domestic reverse charge at 20%. So both the net and the gross are 1,500, and the VAT, as you can see, is 0. The reverse charge applies to items marked with domestic reverse charge, so we're making it very clear in our invoice that this is a domestic reverse charge situation, and we're telling Balfour Beatty customers need to account for the VAT on these items at the rate shown. So the subcontractor is really just handing over the responsibility to the main contractor to account for the VAT. As far as Revenue and Customs are concerned, there is no difference for them. If you imagine under normal rules, if we weren't applying this subcontractor scheme, then we would have the invoice from Mr. Plumber, and the net amount would be 1,500. The VAT would be added to that at 20%, so that would be £300 of VAT, making an invoice total of 1,800. And our subcontractor would pay that VAT on their VAT return. It would be called output VAT. It would be included in box 1, and it would be payable to Revenue and Customs. But it would be our subcontractor that would do that under normal rules. So that would be the sales invoice from Mr. Plumber. That, of course, will become the purchase invoice for the main contractor. So the main contractor receiving that invoice would then say, oh, we've got some input tax. We received an invoice for 1,500. We've got £300 of VAT that we can now reclaim. So they would account for that VAT as input tax, input VAT, in box 4 of the VAT return, and they would reclaim that from Revenue and Customs. So can you see the net effect here is that somebody is paying VAT and somebody is reclaiming VAT. So there's no actual cash flow to Revenue and Customs at this point. £300 is paid to them, then they allow the main contractor to reclaim that £300. So whether we do it in the old way, like this, or we now do it using the reverse charge method, there is no effect for Revenue and Customs other than they've got one person dealing with both sides of the VAT instead of two different individuals. So under the old rules for VAT, under the normal rules for other people, the sales invoice is issued by the customer, they account for output VAT, and the contractor in this case is going to account for the £300 of input VAT. So the subcontractor or the plumber in this case would deal with the sales invoice and the main contractor the purchase side of things. Under the new rules, it's going to be the customer, Beta Balfi, who deals with both sides of that transaction, but there's no net effect in terms of cash flow for Revenue and Customs. In this session then, we're going to have a look at how to calculate the VAT. We've talked about this a little bit perhaps in our previous sessions, but we're just going to get into a little bit more depth here, thinking particularly about how to work out the amount of VAT on a 20% standard rated transaction or on a 5% reduced rate transaction. Because in the exam, we don't know exactly which figures we're going to be given. It's possible that we are given the net or the VAT exclusive figures. And that's what we've dealt with so far in our lectures to date. So if we are given the net or the VAT exclusive figure, we multiply it by the percentage, either 20% or 5%, in order to calculate our VAT. And that's what we've been doing so far. So if, for example, I want to buy a chair, the cost of which is £100, the supplier says, well, there's VAT to be added on top of that of another 20, so I get a total or gross figure of 120. And my calculation there has been to take the £100 multiplied by 20% to add that £20 of VAT on there. That's what I've been doing so far in previous lectures. Now, it's possible that in an assessment question that we might be given the gross figure or the VAT inclusive figure. I may be told the price of the chair that you need to pay is 120, including VAT. And I might be asked how much of that £120 is the chair itself, the net figure, and how much is the VAT. So I need a slightly more sophisticated approach to be able to cope with that. So I think what would be quite important, if that's how I was presented with the information, is that I appreciate that the net figure, or that the VAT exclusive figure, will always be the equivalent of 100%. The VAT will either be 20% or 5%, depending on whether it's standard or reduced, which means that my gross or my VAT inclusive figure will be 120% in this standard rated example. And if I can understand that, then I think I'm in a better position to be able to cope with the maths that's going to be needed to get from the gross figure, which I'll be given, to either the net or the VAT, depending on the question requirement. And that's what we're going to be having a look at through this session. How do we actually do those calculations? We have mentioned previously about rounding on VAT invoices, also in a previous session, but it just crops up again here, just to say that the total amount of VAT on our VAT invoice can be rounded down to the nearest whole penny. That's not an option for retailers, but for the majority of other organisations, you can always round down the VAT on your invoice to the nearest pence. For the purposes of your assessment, VAT will be rounded down to the nearest penny, so watch out for that. And it is likely that in examples, we are going to be calculating VAT, either going from net to gross, from gross to net, maybe from gross to VAT, and so on. So once we understand this little arrangement here, we're likely to be asked to go both forwards and backwards and hunt out the figures that are needed. So let's make sure that we're quite confident with how to do that. Now, mathematically, there is more than one way to calculate one figure once you've been given the other. So the table will set out a couple of different approaches. You must just choose the method that makes the most sense to you, the one that you are happiest with. Let's just put some very simple numbers to this example then. If you have the net amount, how are you going to calculate the VAT? I would think if you have the net amount of, let's say, £100, the simplest way to calculate the VAT is to multiply that by 20%. So my VAT becomes £20. But what if I've got the gross figure? The gross figure would be 120. The goods themselves cost 100, the VAT is 20, so the total I'm expected to pay is 120. So how would I find the net figure or the VAT if I have the gross? Let's start with how would I find the VAT if I have the gross amount. And I would actually go back to this arrangement here. I would remind myself that my net is 100%, that the VAT is 20%, so that the gross figure must be 120. So if a question now gives me that gross figure, the first thing I want to do is say, well, that is 120%. So if I take my gross figure and I divide it by 120, I can then multiply it by 20 to get the VAT figure. Dividing by 120 first will give me the value of 1%, and then multiplying by 20 will give me the 20% VAT. So that would be my preferred approach. Let me just show you underneath a little bit of space here. I think we can do this. If I've got £120 as being my total, if I divide by 120, I find the value of 1%. I multiply by 20, I find the VAT figure, which will be 20. That is actually far more commonly expressed mathematically as multiplied by the 21st and then divide by the 122nd. Gets the same answer. So either way works. The other way to do it is to say, I don't really want to be dealing with these big numbers like 20 out of 120. Is there not a quicker way? And the answer is, yes, there is a quicker way. We could actually cancel that fraction down. So we could learn that if we have the gross figure and we want the VAT, we multiply by 1 divided by 6. So if you prefer that method, go with that one. It really doesn't matter which of those three alternative layouts you like, as long as you can get from the gross figure to the VAT, then either one works. What if we're asked to calculate the net figures, though, rather than the VAT figures? So we know in my little example here, the net is 100, the VAT is 20, the gross is 120. But what if we were asked to calculate the net figures? Well, if we have the net amount, there's nothing to do, so we can just ignore that one. But what if I need to calculate the net figure and I've been given the gross figure? So instead of gross to VAT, I now want to go gross to net. Well, if I know that my gross is £120, I could actually follow the same logic as with the first calculations. I could say that £120 is the gross, so that is actually 120% of the figure that I need. So if I divide it by 120, that gives me the value of 1%. If I then multiply by 100, it will give me the net price, because the net is equal to 100%. That would be far more commonly laid out as multiplied by the 100 first, divided by the 120 afterwards. So I expected to see laid out like that. Or as a shortcut, taking your gross figure, and instead of trying to pick out the 1, being the VAT, you now pick out the 5 out of the 6 as being the net. Of course, you could also, if you know the gross figure, find the gross figure and deduct the VAT to bring you back to the net figure. So if you know the gross is 120 and you've worked out the VAT is 20, then the net must surely be 100. So as you can see, this is very much just maths, and how confident you are with this will perhaps depend on how recently you did any maths and how much you enjoyed it at the time. But I hope that these illustrations are at least giving you a bit of a taster for the different ways that you may choose to do these calculations. I would say once you've chosen a method, stick with it. So the next one then wants to know, can we calculate the gross figure? If we're being given the net, can we calculate the gross? And this has got to be one of the easier ones to do, to be honest, because if we know the standard rate, we know 100%, we're being asked to find 120%. So there's a couple of different ways again that we could actually lay this out. We could say, well, take the £100, that equals the net figure, because we're told that we have the net. So we've got 100%, but we want 120%. So I could just multiply my £100 by 120%. Or you may prefer to say £100 multiplied by 1.2. We're adding 20% on top of that net figure. Another alternative, of course, would be to say, well, I know that my net figure is 100, and I calculated the VAT, such as in the first row there. I know that the VAT is £20, so that must mean that the gross is 120. And of course, if I've got the gross figure, there's nothing to calculate in terms of the gross figure. The second half of this table is taking us through the same calculations, the same methods, but this time where we have reduced rate of 5% VAT rather than the full standard rate of 20%. So our techniques are actually the same, it's just that we're not dealing with 20% anymore, we're dealing with just 5%. And I would start off in just the same way, where I'd write down my net, I would add on my VAT, and I would get my gross. And in doing that, I just feel that I've focused my mind sufficiently so I can work out where I am and where I'm trying to get to. So the first row in the second half of the table says, can we find the VAT if I know the net amount? We can do that certainly. If we know that our net amount is £100, we can simply multiply by 5% to get VAT of £5. So as soon as you know the net figure, you can just multiply by the VAT figure to get that VAT amount. If you have the gross amount, of course, things are a little bit more complicated. So now we've got the gross and we are trying to find the VAT. So I would start again with my little arrangement there. And I'd say I've got the gross amount. Let's make it £105. So if the gross amount is 105, I'm starting from here. And they're asking me to find the VAT. They're asking me to find out how much VAT is included in that gross. So I would probably start by saying, well, if I divide that by 105, that will give me the value of 1%. If I then multiply it by 5, that will give me 5%, which is the VAT. More commonly, you would see that expressed where we do the multiplication first and then the division, but you get exactly the same answer. The shortcut, if you like this method, certainly use it. Take the gross figure, which is what I've done each time. So I start with the gross, and this time I multiply by 1 and divide by 21. And in doing that, I also find the VAT is £5. So it really doesn't matter which of these methods I like better, just find one and stick with it. So that's that one. If we then want to find the net amount, well, if we already have the net, that's nice and easy. If we have the gross and we want to find the net, what would we do now? Well, I'd start off with my gross figure of 105 and say that is 105%. So my starting point is here. And I'm trying to get to there. So I'm at the gross figure. I want to be at the net figure. What can I do? If I divide by 105, I find the value of 1%. If I then multiply by 100, I get the net 100% there. So £100 here. More commonly, you would see that written as the gross multiplied by the 100 first divided by the 105 second. And again, you can use the shortcut method if you prefer. 105 multiplied by this time 20 over 21. If you do decide to go with these shortcut methods, you've got some learning to do because you need to learn those fractions. And then finally, if we need to calculate the gross figure. Well, if we're calculating the gross and we've been given the gross, that's already done. If we need to calculate the gross from the net, as it suggests here, we can take our £100 multiplied by 105%, or we can take our £100 multiplied by 1.05, or we could say, well, £100 is net. Let me add on the VAT that I've already calculated. I calculated the VAT there, so let me just add that figure on and I can come to the gross. So that can seem a bit overwhelming simply because I've shown you perhaps at least 3 methods for each box. You only need to do one, pick the one that you like and stick with it. We've got an illustration here then, so let's see if we can put some of what we've learned into practice with some different numbers. So let's say our invoice is £210. So £210, and it says if this is the net amount. And the other thing that we're going to know here is that we're dealing with standard rated VAT. If a question doesn't specify, VAT is always standard rated. So I would start with my little explanation of the net being 100, VAT being 20, and then the gross being 120. I'd get that written out right from the outset in my workings paper. So if this is the net amount, 210 is the net. Really useful. Let's come back to this then. The net is £100, the net is 100%, and that equals £210. And I want to find firstly the VAT and then the gross. So to calculate the VAT, what would I do? I know that this figure is 100%. I want to find 20%. So the simplest and easiest way to do that is to take my net figure, the 100%, and just multiply it by 0.2. Or if you prefer on the calculator, multiply it by 20%. That will give you the VAT of 42. I then think the easiest way to find the gross figure would be to take the net and add the VAT on. It's not what they want us to do here, so we will do the other way as well, but that would perhaps be the easiest. If you've calculated the VAT, you can just add it onto the net figure to find the gross. Alternative ways that we've seen then if we take our net figure and multiply it by 120%, we would get the gross. Or we can take our net figure, multiply it by 1.2, we're doing exactly the same, that would also give us the gross figure. If the 210 is the gross amount, how would that be different? Well, I would put my little explanation together here. And that hasn't changed. Net is still 100, VAT is still 20%, gross is still 120%. The difference now is that the £210 gets lined up with the gross instead of the net. And the first thing it asks me is, I've got 210 gross, how can I calculate the VAT? So the suggested solution here says, why don't you use the shortcut? You know the gross, you can multiply by 1, divide by 6 to find £35 as being the VAT. If you don't like the shortcut, you don't want to have to learn anything extra, then you could say, okay, well, if I'm starting here with 120 and I want to have the 20, what if I multiplied by 20 to put that in and I divided by 120 to get that out? So you're dividing by 120 to find the value of 1% and then times in by 20 to find the VAT figure. And the same when we come to do the net. Start with the gross. You'd say, I've got the gross and now I want to find the net. So I'm going to multiply by 100 to find the net and divide by 120 to get the gross out. So you divide by 120 because that's what you're starting with. That gives you the value of 1% and then multiply by the 100 to get the 100% net figure. Or you can use the 5/6 that it suggests. So quite a lot of different methods demonstrated there. As I've said, pick the one that you like and stick with it. We're going to do some more examples on this, a few more calculations for us to practice in the next session, so join me for that.